So one thing I love to talk about oftentimes when we're talking to traders, when I talk to new traders, when I talk to certain traders that lean a little more towards the tinfoil and have a little bit of conspiracy theory, which is fine. If there are conspiracies happening anywhere, it's happening with money. Look, I live in the United States of America. We have the greatest system in the world for economics and capitalism. It also allows our politicians to become multi-millionaires. So I can't help but understand people that feel a certain kind of way about people that are able to make money in ways that feel a little dishonest. Sometimes when you're trading, I'm sure everyone's had it. They hop into a trade, everything goes well, and then they see an order come across the DOM. They see some kind of thing happen to the product that they're trading where you're long, you're in a great position. It was at a support level that you've been watching for weeks or something, and then all of a sudden it dumps. What happened there? Volume came across. Much more volume than you and I can scrounge up.
Yep.
Oftentimes, this volume comes through what we understand to be dark pools. I know a lot of people talk about dark pools, but very few people actually understand what they are. So a dark pool is a private organization, usually some kind of private exchange for trading securities. It can be used in multiple different ways. CFDs don't necessarily need dark pools because you guys are already a dark pool already because there's no clarity on volume at all. But in industries where regulation is actually a big deal, where they actually care about the traders that are trading, we know a certain amount about volume. This is true, Jordan. You know it's true, man. You guys.
Yeah, it's not.
You guys like it's the original cryptocurrency because they're just like, we're just gonna throw some money at it and figure it out. So, a dark pool is really what it allows people to do, what it allows organizations and individuals to do, and institutions is they can trade without immediate exposure. Here in the States, for example, when you're looking at trading a security, you have to report that stuff. You can't just throw the money across, right? So when you're talking about placing large trades, the only way for you to do it in a quote unquote secret way is if you put it through a dark pool, which is something, an organization that is legally registered with the SEC. It is 100% legal. You put the trade through a dark pool, and then that allows you to report your trades later, usually quarterly, than the time that you place the trade. This allows large organizations like, say, a Berkshire Hathaway to step in and buy 500,000 shares of Coke. And we don't find out about it until their financials come out in Q3, Q4, Q1, whatever that might be. This tool is really all about deception, right? Dark pools came to be, first off in the 80s, the SEC allowed large block orders to occur. Prior to that point, by large block orders, I'm talking about thousands of shares, thousands of contracts in a particular asset. And of course, when electronic trading came to be and the NASDAQ really stepped up their game in the early 2000s, the SEC actually became a little bit more lax on regulation of dark pools because they wanted to lower transaction costs, which would allow for the increasing of dark pools, but also allow for the increasing of retail participation, more money, more problems. But hey, it gives more people the opportunity to trade, and that's what the SEC was after. In practice, I said it once, I'll say it again. All warfare is based in deception, and trading in many ways, shapes, and forms is based in some way on some kind of warfare. You have multiple different parties that have different kinds of interests trading things. I would love to say that everything is 100% above board and people are doing things because they really believe in the product. They really believe in the companies. But the reality of it is everyone trades to make money. So when you're looking at dark pools, they're often considered to be these mysterious entities owned by characters that are akin to Bond villains, right? You think Goldfinger's behind a lot of these dark pools, but that's not often really the case. Most often, dark pools are tools used by household names to make trades quietly. The whole point is to avoid exactly what happened with a GameStop. GameStop, a lot of people wonder how we didn't know there was such an intense short float on GameStop. If you don't know what that means, I'll break that down in a separate video because that's a whole other thing. But the fact of the matter was, a GameStop had 100% of their shares available on the open market because that makes sense, and 120% of the available shares were being shorted in the options market, which doesn't make sense, right? What happened there was a collection of different dark pools came in and they began to short GameStop. The reason why the stock didn't fall out of the sky immediately is because they would place these trades in a dark pool. The reason for that is if you place all of these trades at once, if you sell 500,000 shares or have put options on this particular entity and 500,000 contracts have come across, then the stock falls out of the sky. That rings a lot of red flags, and that can disrupt the market in some way, shape, or form. So what do they do instead? They use dark pools. Dark pools are really well known. You know, Bloomberg Tradebook is a great example of a dark pool. It's used by a larger corporation, in this case, Bloomberg LP. And fun fact, they were involved in the shorting of GameStop, which led to the legendary run of the equity.
Yeah.
You know, just a quick example of what dark pool trades look like. This is actually some data taken from TradeDelicious. It's a site that I've used. I've never actually said the name of that site out loud, but it's something that I've used before to take a look at dark pool trades. Most of the time, I must admit, I use it out of curiosity because a lot of congressmen and women here in the States trade through dark pools because they don't have to. That allows them to not report their trades for 45 days. But, you know, dark pools trade secretly only in name. They cannot hide their size. So when you're looking at these examples of trades that took place on the 4th of December, which is yesterday here in the States, you see a bunch of these tickers in the symbol area, see the price, and then you see the size of contracts, or in this case, shares that were traded. And this is only a case where we're talking about a significant amount of the trade. So we're talking about at least 1% of the total value of the stock was traded all at one time in a particular trading block. This is all stuff that happened on the New York Stock Exchange. This is available for anyone to see. And it just gives a good example of what that stuff looks like. Look, for traders, for investors, guys, at the end of the day, you have to remember that dark pools, it's a lagging indicator. By the time we find out these trades have happened, it's gone. It's past tense. It happened. And oftentimes it happened 3 months prior to you even being able to look at it because it's something that is reported quarterly. So when people talk about trying to use dark pools as day traders, my immediate response is you should probably use dark pools the same way you use your YouTube page. It should be a source of entertainment, not necessarily a tool to trade with, you know, because day trading, you need quick information, you need that stuff readily available to you. And if you have access to who's trading in these dark pools, you're probably not day trading anyway.
Yeah.
In terms of investors, though, you know, investors can use dark pools maybe as a type of potential confluence. If you see that congressmen and women on the defense committee here in the States, in the House, are buying up Lockheed Martin, it might be a good indication that you should buy up some Lockheed Martin. And so, but you always want to use these things in confluence with other things. You don't want to buy a stock that's down 10% just because someone else has traded 100,000 shares or 100,000 contracts on the options market. It's exactly as Devin's saying, quick and relevant information is incredibly important when you're talking about these things. Devin, welcome in, man. It's always good to see you, friend. But that is the core of the trading lab.